odsetek zagraniczny wyraźnie spadł. Euro w franku kosztuje 4,52, czyli o 3 grosze mniej niż wczoraj. Frank szwajcarski 4,64, dolar 4,23, a brytyjski funt 5,27. To jest efektem opublikowanych wczoraj oficjalnych danych pokazujących, że w maju inflacja bardzo wyraźnie spadła z 14,7 do 13%. To jest bardzo szybki zjazd do poziomu najniższego od roku. Z drugiej strony nie możemy zapominać, że inflacja pozostaje zdecydowanie za wysoka, a przez to ceny wciąż pędzą i to będzie przecież jednym z głównych tematów kampanii wyborczej.
Inflacja tak zwana, do której PiS się odwołuje, teraz działa w odwrotną stronę, dlatego że przez ostatnie miesiące ceny nośników energii, ropy i tak dalej spadły, a ta inflacja wewnętrzna, krajowa, którą możemy nazwać PiS-inflacją, ona dalej się trzyma.
Mówił w naszym studiu były minister finansów Jacek Rostowski. W kolejnych miesiącach ten spadek inflacji będzie niestety spowalniał, tak ostrzegają ekonomiści, i nie pomogą tutaj wzrosty cen paliw. One powróciły. Ten tydzień przyniósł bowiem zatrzymanie trwającego od lutego trendu spadku cen paliw. Paliwa podrożały mniej więcej o 5-7 groszy w porównaniu do zeszłego tygodnia i niestety w kolejnych może być podobnie. W tej chwili najdrożej jest na stacjach Kujek i Pomorza, Mazowsza oraz Pełnego Śląska. Najtaniej natomiast jest na stacjach na Śląsku oraz Opolszczyźnie.
Sorry, top podcasts from Apple UK and officials updates are not available right now. Sorry, Bloomberg opinions updates are not available right now. In weather, in rainfall, it's 9 degrees Celsius with mostly sunny skies. Today's forecast calls for moderate rain, with a high of 19 degrees and a low of 5 degrees. That's all for now. Hush, there's nothing on the calendar for the remainder of the day. Today, in Norfolk, the air pollution level is low, with an air quality index of 2. Currently, in Norfolk it's 9 degrees Celsius with mostly sunny skies. You can expect more of the same today, with a high of 19 degrees and a low of 5 degrees.
Next one play Bloomberg.
One track, one
Hey Colton,
Hello DC, how are you?
very good, very good. Made some money during Sydney session, so now I'm just waiting patiently.
Okay, I just got missed. Yeah, I don't think so. I just try to short. Hello, can you hear me?
Yes, yes.
I just try to short this new structure high, and if it won't work, I leaving it as well till like probably 3:30, an hour after New York Open, after the second news.
Today we have news also.
Two
Oh,
of them.
come on.
Today we've got a lot of news actually.
I wanna cancel the session.
Beginning of the month, and we've got the Europe CPI, we've got all of the Europe countries PMI, we've got uh, non-farm payroll USD, unemployment claims USD. This is before the market open. Then half an hour after market open, manufacturing PMI. So it's not the best day.
Mhm.
I will be playing with the charts, doing some setups. I set up yesterday something I found on my old PC. I had something which transferring the signal between the MT4 and trading view. So I managed to set up that one. I still need to check how to set up brackets properly because for now it's just taking the orders and that's it. But that was pretty much spot on for me because it opened the trade in a night. It add to the trade as well. So on crude, I am very nicely up. When we print this reversal line, it opened me a trade, and then it added
Mm.
here to the trade, and we're still going up.
Mm.
So we'll see how this is going, but I will be taking this like small things on MT4. It's quite small account, so there is not like huge things, but still, with this move, it was around $300.
Plus is plus.
Yeah, so I am very happy. It's coming for nothing, just for the signal we just sent. Okay, and Q. I'm not expecting anything amazing today from you.
Mhm. Green, green, red, red. Okay, green, green, red, red. And we're going up, we're going up. But the structure is well, we held. And we are in a sandwich now.
Mm,
Of bullish and bearish order blocks and stuff like that.
we are below the below the trending line as well. So
Yeah, okay, so what we have? Dividers green, okay. VWAP green and we're above. That is 2 points for the long. WMAs not in order, so okay. Scalping is above the moving average, 1 more point for long. But scalping is red. What is 1 point for short? Select candles are gray, direction is green. Okay, so and then what is the story? The story is Sydney took New York liquidity and we've been going up since then.
mm,
Okay, and we've been making higher highs, higher highs, higher highs, higher highs. The structure though, we are still,
you see, there
well,
is one thing. Did really Sydney took the New York liquidity? It's just very weaky 15-minute candle. There is barely touch it, barely touch the order block.
yes, but we went below.
Yeah, but with a huge rejection. So I think so. I would like to really go back there.
Yeah, I mean structure is down, so if the then we are at the 618 right now.
Because
We
if
are
you
playing around it, and also that is what I was watching because if Frankfurt cannot take price higher to break the 618, then that is weakness.
if you check other markets, yes, YM Dow, sorry, YM and Russell, none of them even test the New York
Well, yeah,
bottom.
NQ is more crazy, and however, everything is up today so far, but NQ is the weakest of them all.
Uh-huh.
RTY again the strongest. RTY got his ass kicked yesterday.
Yeah, that was nice to see. I didn't download the other indicators you show me. I didn't work on them yet, so I will be doing that at some point. Come
Mm-hmm.
on, can you give me?
TP.
Really, I don't know why I opened for contracts, but that's okay.
For minis, yay.
It was. I didn't expect them to go any higher. Because one of the reason we fly through previous day close where it was rejected earlier on, and they just fly through it. So on the way back, it filled me in on previous day close. We ranged there, and I want to see going down. It wasn't the best entry. Either I should enter
Mm.
much higher, or I should wait for us to go below the upper green fib. So actually, this was the worst area for me to enter it, and I noticed it bit too late.
Why?
As I mentioned, I my entry is just on a previous day close, and I never enter here because the price can go anywhere from here. I
Mm.
I should enter at the top of the candle where we was making the new high,
Mm.
or I should wait for the price to go below the upper green fib. If
Ah,
you'll make a new low, then yes,
well, until now the upper green fib is holding
holding
price
there.
actually. Two times we retested it and
So I will see what this will give it to me, but 3 minutes.
yeah.
What was the name of the indicator with this zigzag and the moving average?
What zigzag?
The white zigzag, and then you've got this red cloud from the moving average or green cloud. I forgot it.
Ah, rubber band.
It's a rubber band?
Rubber band. Rubber band, not rubber band.
Mm, no, there is no rubber band indicator at Adam. Oh yeah, there is rubber band. 1 second. Yeah, this is it. Quality line. Show rubber band. Okay. Cloud is green, view up is green. 200 is green, but we are below it. 36 is green, and okay. Maybe it wasn't so bad entry actually. And we cannot cross the bullish reversal line on here. Oh, depends which chart I'm checking is showing me better things. This makes sense. You should give me 10 points. 4 hour is
Just
here. We are above it. We test the expensive area and reject us straight away from there. The London slow open as well. Do you see how's going how's going, what's the name of it? The work on the new updates for the,
Market structure.
yeah, with the auto flip.
Don't ask me, ask Adam. He said it's so difficult what I'm asking of him. Yes, but in the meantime, I did my own, not autofib, but um, like a fib tool,
Yeah.
which I'm using with very good success. I'm still testing it, but I can show it to you if you want.
Yeah. Do you want to
Whoa, that's
share
very
screen?
nice. That's very
Ooh
nice.
la
Yes,
la,
let me.
done. Yes, that's, I love it.
Oh,
Yes. Patience the
yes, that's
king.
very, very nice. I told you.
I told
Uh,
myself that along it
i-
was too suspicious for me. Okay, this is the channel, this is the reset of the time, this is a previous for our candle. So I wanna see if this is the rejection or I am break even now. I don't.
okay, that's very nice. Let me share my. Where is it? This one.
You need to show me how to build these bloody tools because I've got bit of the time now, so
Okay,
I will be I will be doing it myself.
just tell me your ideas. Where is the? Okay, can you see my screen?
Yeah.
Okay, so this is the fib tool.
Uh-huh.
Okay, you have the settings here. You don't need to touch this. This is the levels that you want.
Uh-huh.
Invalidation is 786. If we go below the swing, it will go to, and you have the target zone, and you just your swing points, you move them with these lines, right? So in the morning we
Ah.
had this huge drop. You can choose where to, and it automatically detects if it's a upswing or a downswing. And this is the middle line, and this is your golden zone.
Bloody hell,
And
so that was work perfect for you today. This is why you was
yes,
shorting.
yes, that is what I was watching whole day today. I was able to I caught this short that was around 60 70 points in like few minutes. I said, "Whoa, ATR in Asia
Uh-huh.
went up to 12."
Uh-huh. Uh-huh.
It was very very good. And then since then I've been waiting for this fib because it's working so well when you have the golden zone. And then this upper from 50 to 100, it will shade the area to show you
Uh-huh.
which is discount
Yeah.
and which is premium area. And then you can change. I
And
have it on all my charts at in on 5 minute on the and then you can
okay,
you can see,
your TP it's the red zone, yeah?
yeah, it's the red zone of the swing, yeah.
Okay, that's nice.
And you can see also on this one we had here this swing, and if you wanted to get into the long, if you watch all this, okay, I want to get into the long, you have your entry right here.
Uh-huh.
You can see it. We rejected at the we did go below, but we rejected, and you got the surge, the X scalper, and my oscillator. All of them oversold, and then boom, and it reached target. See,
Yeah,
and you're done. So that is how I've been playing with it for
for now.
for now. Yeah,
That look
until
good.
Adam decides to move his ass
So,
and get to work.
you know what I want to ask you now?
What?
Can you send it to me, please? Or,
It's
or you
not
do,
it's not ready yet.
DC? I can test it the same way as you.
Ah, okay, okay, okay. See?
Yeah,
Exactly at another
yeah,
618.
yeah,
And
yeah.
then I've been trying to tell Adams to do this automatically because he has access to this point,
Yeah.
right? So whenever there's a new structure high, just draw the fib, and then if the 6180 is broken, then delete it and redraw it from another swing.
Okay.
And then he said that's so difficult. And yeah.
I'm staying in this shot actually. I moved the stop loss to original entry.
Okay.
Oh fuck.
No,
So
not
now,
this one, not this one. Yeah.
I don't want to re-enter the trade.
I actually want to do this on Ninja.
But Ninja is different
This
coding completely. Did you
this
code something for Ninja or not?
no, no, no. I have no idea how to do. I have no idea, but I want this like a tool, drawing tool.
Ah,
And I
okay.
don't need an indicator like a drawing tool, but I want this shaded areas and ability to put alert.
Mm-hmm.
Because this one I was thinking to make alerts on it when the 618 is reached, and then because if you change to the 5 minute, for example, and it's the same thing, how wonderful it would be if you just got alerted when we touch this one.
So 618 you extended to 65, yeah?
Yeah, yeah. And this is your golden zone, and I can
Yeah.
I can set up an alert when this one is here. Just send you an email or something. It's at 618. If you're watching the swing time frames or even the 15, to know even when to take profit if you are in a long, for example. Because
That's
if you played this double bottom with the divergence and everything it had, here definitely you would want to take profit. At least a
yeah.
part of your contract.
Yeah, yeah, yeah.
You know. So yeah, that was not difficult to do. And then once you got this line, you can move them to the swings as much as you want and see all the fibs that you want.
But you don't want to make the too messy the thing, so
No, 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 no. Just one.
so yeah. So
Maximum two.
basically,
One for the buy side, one for the sell side. So you know where the other side is.
oh yeah, okay.
Yeah.
No, but that's true. That's look really nice. The reason why I moved the stop loss to my original entry, and I don't know if it was a good idea. The 15-minute WMA is just there now.
Okay. Yes, but they're not in order, so we will see if. So this is what I've been playing it for the last week.
That's really nice. This is view up,
Yes.
session view up.
And here you can control the color for the label so it's not too messy, and also the uh, transparency for this zone so it it's easier to see, or this premium discount zone if you want more. So you can tell yourself, I don't want to touch any shorts, for example, here until we are in the premium zone, like
Yeah.
here.
That's actually a really good idea.
Yeah, I know I have good ideas all the time, and I tell them to Adam, but he's so slow to because it's
It's taking a
difficult.
time.
He says
Okay.
yes, and he sent me a version. I will send you the picture of what he sent me. Copy image. Send it to you in secret. And you can see how ugly it is.
1 second, just getting it. Ugly and not ugly. It's not really bad. Okay, it's your golden zone and TP is the something wrong with it
The
actually. The
yes,
blue
well, see,
the
it
blue
looks
zone.
it looks because instead I told him to do the same logic as the boxes. You know, when
Yeah.
new structure high is created, you have a box, and at the same time just draw a fib. But he doesn't want to do that. He wants to do from the reversal lines.
Okay.
But the problem with the reversal line is that you can have auto, you can
Yeah.
have long and short, you can have a trend, you can have aggressive, you can have contrarian. So they will appear at different points in time,
Yeah. That's
right?
true.
So basically, he starts draw that golden zone when that reversal line starts drawing. But that is the golden zone for the previous swing, which
Yeah, yeah,
happened like.
yeah.
So it's so confusing.
And you are too late to enter the trade, and actually, it's not showing your expensive and cheap area where you should buy or where you shouldn't touch it. I
Exactly.
like that idea actually. It's showing you really stay away, don't buy or don't sell now because it's not worth it.
Yeah. Yeah.
Okay, that's nice. That's nice.
So now you can see that on my screen we this your short was very nice and you should have stayed break even.
My long,
But
yeah, actually, yeah.
but we went into the I was explaining so that's why I didn't take it. We went into the basically cheap area, right?
Right.
And everything was set up for the long actually. So this was a beautiful long.
Yeah.
And you already had like 30 points up. And now when we have a close above the 786, then I will uh, rearrange my fibs. And that is what I wanted Adam to do it automatically. You know, when this one is invalidated and this swing is
Um,
finished, then you have to look at
but it didn't
other.
invalidate it yet. It's still below it.
No, not yet. Still below, yeah, still below the 786. Yeah, but it's been very helpful. And then I only added this one. I didn't say to Adam. I only added it this morning.
Oh, okay.
You know, so I took this short here, gave me TP1, and then I saw this so many surges, and I said okay. Then I was able to take. Oh, you can see here.
Mm-hmm.
You can see here we have this new structure high, right? From this high low to new structure high looks exactly 786.
Yeah.
And if like you, if like uh, you wake up and already Sydney is almost finished, right? And then you put these fibs and you see if the 50 holds more than the 61.8 or the 786 holds more than the 618 and so on. So I saw here 786 held. Okay, so in this case, when you go and you try to take this trade, if you missed it, right? And this one doesn't get touched, so another new structure high here. So when this one comes to the 618, you're not so eager because we're in the middle of the red surge, and we have a lot of uh, bearish volume. So you wait and see at the 786 because you have the story from here.
Yeah,
786, they like it today, and then there's your long.
that look
So
quite good.
yeah, yeah. So I've been trying to think more like an algorithm because they are which running the market
Yeah,
now.
there is no emotions.
Yeah. And if you want to know why they stopped here, it's exactly the 618. Look, from the
Mhm.
previous string, exactly like on the dot. And the surge finishes, and you're in the trade.
That's really nice. True.
Yep. Oh. If you have any ideas what could make it better, just
Share it.
let me know. Let me know. This morning I just got the idea to do this premium discount line, and then it's just drawing one more box and then
Okay.
finished. So that's why I asked. You were on the live call yesterday, right?
Yeah.
So that's why I asked Adam, if you have your start bar and end bar, can you put a volume profile between it? Because I wanted a volume profile also if you have.
Mhm.
That would be amazing, but he said it's so difficult, so
You can do it
I
on
don't know.
NT8.
On NT8, yes, but on NT8 I don't know how to do this.
Mhm.
Uh,
Okay, I will have a look for the because there is quite a lot of things on the volume profile on Trading View. So I will just try to look for something if we can put it between the bars.
yeah, yeah.
Because
I tried one with the code, but it plotted the volume profile, yes, but it was nothing like if you use the Trading View tool. The
okay,
POC, that everything was wrong. So I said,
yeah,
okay, you're not good.
we need to find somebody who done it, and there is quite a lot of them for free with the code, so we can just see how the code look like.
Yeah, yeah.
This is what I was saying. They test 15-minute WMA. Mhm. Yeah, as well I expect the short will happen, but I don't give a damn now about
normal cycle where a bull market begins with very narrow market leadership, you need that to be broadening out to get more confidence. But equally, for active management, this is bringing opportunities up because you're starting to say, right, well, it's not about investing at the index level or just focusing on those top 10. There are some attractive valuations to be had in places like energy. Some of the large cap banks at this stage as well, I think, are areas that are looking attractive, provided you're screening on quality and that more defensive sort of balance sheet strength and low leverage for that key client banks. Okay, screening quality for prices value in banks, energy, and still preference for US treasuries of European sovereign debt. Hugh Dimber, always excellent, of course. VP and EMEA, global market strategist at JP Morgan Asset Management. Thank you. Let's get a Bloomberg Business Flash now. Nvidia's CEO is said to be heading to China later this month to meet with tech executives in the world's biggest chip market. The source says companies on his itinerary include gaming leader Tencent and TikTok owner ByteDance. The CEO's first China trip in years will come as the US tries to curb Beijing's access to leading edge chip technology. EV Motor Lucid Group is raising about $3 billion in a common stock offering. The majority of the money is coming from Saudi Arabia's Public Investment Fund, which is buying $1.8 billion of the stock in a private placement. The US car maker has stumbled recently as it grapples with heavy costs, production challenges, and competition. And it's European papers.
Now, talk coming up, we'll look at your stocks on the move, including Dr. Martens, the iconic boot maker, slumping after its full-year profit missed expectations. We'll have to know that shortly, and this is
Not shorting it. Do you see you sharing the code now for the strategy?
No, I was just watching the fib tools.
I thought that
The,
you forgot that you're sharing the stream,
no,
so
no, 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 no. I was just reading this. Oh, that's interesting. And then if I can modify it with if I can modify it with the code from the box tool, it will probably take a couple of days. But this weekend I'm pretty free, so
you can play.
I can play with trying to build something, a Frankenstein of an indicator.
Booze during the pandemic and still haven't got through that. And I support quite a lot of it. But the stock is up around 1.4% as we see on the screen. Now the full year earnings did actually beat expectations. And the stock went into today at a 2-year low. So a lot of that is already priced in, probably because of some of the luxury goods outlets that we've seen in the recent weeks that haven't been that good. People expected this to be weak. It has been weak, and the stock is staying up around 1% at the moment.
I will send you something nice.
Hmm.
Exactly, so they're a classic food maker, aren't they, Dr. Martens? And that stock getting hit really hard today, the worst performer in London, down 10%. Their full year profit missed expectations, and analysts are saying there could be downgrades in terms of double-digit percent cuts to their earnings expectations. Now, Morgan Stanley writes in the note today that Doc Martens is past its peak brand momentum, so that's a pretty big call.
Oh, this is a daily.
Well-known brand, but they're kind of calling the end of their growth there. RBC, meanwhile, cutting their estimates by 15%. Analysts not liking this report at all. As I say, that is the worst performing in London for Dr. Martens.
Such like a 90s throwback. I'm thinking of like crêpe flambé with Remy and like Dr. Martens. FTSE 100 index changes.
So the FTSE 100, we have the quarterly rebalancing thing that we look out for every 3 months, and it brought some big changes.
I would very much like to get into this short, long.
Yeah, the entry there was perfect.
Yeah, because do you know why? If the 786 goes gets invalidated, then we're gonna go and retest Sydney's high.
This what I seek actually. 34.
And there it will be your short, or maybe a little bit higher at New York middle of the box and London top from yesterday. That would be a big short, a very nice short over there. I see. And if we use the fib tools, okay. This one, no, but this one, ooh la la. 356 is exactly another 618 from the big swing
Mm.
to go short. That looks beautiful. But we're still far away, so in the meantime, let's see how we can get into this long. No, it's too expensive, obviously.
Alexa, stop.
Go feed the dog.
I will. Yeah, daily reminder. Then I'll have a phone from the vet today.
to the open, everyone. 30 minutes into the European trading day, and here are your top stories. The U.S. debt limit bill heads to the Senate after winning passage of the House with a looming default deadline. Fed officials say the FOMC may keep the policy rate steady this month, but more hikes could follow. European stocks and U.S. futures are in big reading. Plus, on the 25th anniversary of the ECB's founding, we get Eurozone's latest CPI readings with signs that inflation is actually cooling. So, John, the markets seem to like the news today.
Yes, that trifecta, as you said, of positive catalysts coming through for these equity markets. Europe snapping 3 days of losses, gaining across the benchmark 0.8% on that, slightly better than expected. That surprise in terms of the China data. We haven't been able to say that for a long time. Of course, the progress in Washington, and then hints that it looks like June is going to be a pause from the Fed. Going to unpack that story just in the next couple of minutes. The DAX is gaining strongly, 149 points, adding 0.9%. Autos is a big factor there. Again, we can tie that to the China story. Energy also rallying. That's looking at the 3100, gave you 36 points, and in 0.5%. We can look at the sectors now as we switch the boards and see how things are progressing this Thursday morning. Of course, the importance of the data out of the US as well, with the non-farm payrolls coming out tomorrow. To what extent will that round out the picture around this tighter labour market? Media at the top in terms of the sectors, gaining 1.3%. There's basic resources. We've seen a really strong rally around copper and iron ore again on the, at least for now, at least for today, the enthusiasm around demand out of China. Energy also rallying, Brent WTI up after pressure on the commodity space and the oil space, again 1%. Just 3 sectors in the red. Real estate at the bottom of the list, down 0.5%. Of course, the ECB has flagged this as a potential vulnerability in terms of financial stress.
Now, Fed Governor and Vice Chair nominee Philip Jefferson has signaled that the central bank is actually leaning towards keeping rates steady in June. But the central bank's position may be tested after U.S. job openings came in at their highest in 3 months. We're joining us now for more is Valerie Vitale. So, first of all, where's the thinking inside the Fed? And we actually heard from 2 Fed governors that if you pause in June, it doesn't mean you're done. It just gives you a bit of time to pause and reflect.
Yeah, so even though we've heard, ad nauseum from Fed members that it paused in
Actually, yes,
they
even
continue to
66.
communicate that they're on a hiking bias, meaning that they're
Going to
probably
the dog.
and any upside from the data is going to keep them hiking most likely in July. But at the same time, we've been having that communication that the data coming out of the U.S. economy continues to surprise. The job openings data came in strong yesterday, and the adds to Friday beat in core PCE and in durable goods, which is important because durable goods is a feeder to GDP, showing up that the U.S. economy is holding up still very well under the weight of 500 basis points of Fed increases in the last 14 months. But what I do think this means is that the Fed is more likely to communicate this pause in June. We're probably more likely to hear some sort of hawkish language out of Powell in the press conference. And don't forget, we get their summary of economic projections at this meeting, which is that infamous dot plot. The more likelihood that even though they pause, maybe we see one of those dots go above 6, or maybe we see those dots shift higher. Remember, those dots are very key for the market because it gives us a glimpse of where these Fed members are seeing the terminal rate this year.
Yeah, and obviously, and we see that often David Powell referencing the dot plot when he's quizzed on the trajectory around rates. To what extent do the non-farm payrolls, though, reports of them this week, is that undercut by the signalling from Jeffries that we're going to get a pause? And as you suggest, it could be this hawkish pause.
It's going to be a tough call because, look, if we get a hot payroll print on Friday, and that includes the headline number and maybe wage gains being strong as well, that does bode well for the Fed not pausing. But the issue is that their blackout period begins on Saturday. And that really leaves them, a few hours to communicate a shift in direction. It's probably unlikely we get that, but again, any big beat in this data is more likely that those dots in that dot plot will shift higher, that Powell will be forced to sound quite hawkish in his press conference in order to appease more of the hawkish members of the FOMC.
Yields up in front end of the 2-year, going 5 basis points in the session, 445 in the 2-year. Very tight out. Thank you very much indeed. Looking ahead, of course, to the non-farm payroll print tomorrow. Forecast of around 195,000 being added in the month of May. From inflation and the labour market in the US then to Eurozone inflation data, we're going to get that for the month of May as well shortly. That's after some of Europe's major economies saw the pace of inflation fall in data over the last couple of days.
Now let's get more from our Bloomberg Europe correspondent. Good morning. When you run us through some of the data
was CPI in focus today. We've had a number of countries where baseline inflation maybe comes off a bit. Yes, good morning to
Coming back.
we're looking at the big four, particularly Germany, of course, a lot of focus on that number yesterday, which again seemed to cool. You have French inflation also cooling, and you have a number from Spain significantly cooling. Italian inflation also eased, not as much as expected. Of course, these are different economies with different dynamics, but what matters here is the trend, which again should point to this cooling down, which could be reflected in the number that we're about to get in a few hours' time from now. When you look at the survey that we have on the terminal, we see inflation at 6.3%. Obviously, this is way above the European Central Bank target. There's no question about that. But the idea here is the trend. The focus, however, for these will also be on core inflation that is also expected to ease, but not as fast. And that's the dynamics that we're seeing. Headline inflation immediately dropping as soon as energy prices do, but headline inflation also stickier perhaps. It's that combination, that balance between the two of them, the European policymakers will have to really weigh on in this decision that is coming up.
Yeah, we were hearing, we were speaking to JP Morgan's Hugh Gimber just earlier in the show. He still expects a further 2 additional hikes, another 50 basis points coming through from the ECB. But Marie, you know very well the debate that's going on within the Governing Council. What's your sense as to how that data plays into that debate around the doves and the hawks?
Look, I think it will come to data because the European Central Bank has said they're now mega data dependent. They always have been, but now really look at the transmissions, but also details of it, like more inflation. I mean, this has been a recurring theme. We also know there will be new projections that will come up with the meeting that is happening in 2 weeks. What is clear now is that the European Central Bank has signaled they are not done yet. So this hike in June is very well priced in by the market. It is very well expected, but we know that they've also probably entered the final stage. And it's at that point where you see tensions already happen. And we've seen that repeatedly in the meetings previously. This idea that decisions were not fully unanimous, that there is a debate on the board between what happens after the summer too. So a lot of this will feature into it. What is interesting though is that when we saw the numbers yesterday, especially the German CPI print, the market reversed this idea that 2 hikes are definitely on the cards, and that a cumulative 50 basis points will actually drop below that. So yes to June, what happens after, that's going to be a real debate.
Thank you so much, Maria, today, there, Europe correspondent, of course, for Bloomberg. Coming up, JP Morgan leads Wall Street's AI race. Who else is in the running? What are the risks? We'll discuss that next. And this is Bloomberg.
Okay, so 76 also is done. Very tempted to take this short.
Really?
You're not?
I am. I am, but not touching it.
Not. I want to see a little bit more weakness. It's a very good area to short. I mean, play the retracement until the long is. We can join the long. Let's see what we have here. Yeah, it's not. that high?
You guys hear me?
Yes.
Hey, Ian.
How are you?
Morning, morning, Emilio.
Just
Well, good evening.
conversing.
Yeah, waiting for it to bounce off my level.
What level you have? 30? 3.
14,333.
Yeah, 333. Yeah. Everybody's waiting for that Sydney high.
Hmm,
Be
not much to
patient.
do till then.
You took it?
No.
Me? No. Sorry.
Okay.
Yeah, that will be. There is a sign for the sale. Bullish reversal line form.
Long setup.
Then you got a long setup.
No. Just don't listen to her. She has no idea what she's talking about. She's drunk all the time.
Okay.
The only way to be.
Growing tools.
Hmm, maybe. Currently experiencing some computer difficulties.
Oh, come on. Okay. TP1 done.
You, what? Huh.
DC, you are aggressive today.
Oh, how's it related to me?
I I had a 618 from a another swing plus this one had reached its target. I mean the extension. So how could I?
Yeah.
And we're still in expensive areas. So um, I don't know how much more I can get, but at least trade is protected. I cannot lose.
Yeah.
One of the funniest memes is someone saying like AI, if you're a graphic designer, you're like a human, giving you precise information on how you want the graphics, so there's no chance you're gonna
some will be hoping that stays the case in terms of preservation of jobs.
Now, the aftermath of UBS Credit Suisse mega deal is posing fresh challenges for the Swiss bank and its presumed chief executive officer in waiting. When Iqbal Khan joined UBS from the start of 2019, the move sparked a tabloid scandal over a cloak and dagger surveillance operation in the Star Bank. But in this year's forced marriage of Switzerland's two biggest lenders, he's been conspicuously low-key. Let's bring Bloomberg's
Long
Tom
setup.
Tom, always great to speak to you because you always bring us like
We're going short.
this is pretty big, juicy stuff.
So yeah, that's a good one. Proper contrarian.
Yes, she should be your friend, Colton. She's like long setup. Okay, short.
Yeah, it'll be like this means something to me.
Yeah, don't laugh at my lady. I just
You try to teach her something.
no, I just set up alerts at the beginning of the bar, and then each bar starts with an volume imbalance. So she's like, okay, long setup, and then by the end the bar is finished. Is like the signal is gone, of course.
With those current Credit Suisse employees.
Yeah, so we understand that there's definitely some tension, with some people. So he's been flying out to various regions and looking to sort of pitch the
That's
UBS
what I want to
way
see.
and
50% of the move, nice.
within UBS.
There you go. See, and but
Massive gig, and
the level is nice because we are at the
stuff is important from Credit Suisse.
moving average. Well, they're not in order, and it didn't hold until now so much. Only a little bit. After see previous times we went below it like it wasn't even there. So we might hold, but and also
We might not.
Surge is starting. So let's see.
It's just getting back in Frankfurt.
Yeah, it's trying to anyway.
Yeah, trying to. That's fair.
Trying to, and we have here we have some weeks.
Nice push down now would be good.
Are you short too?
Yep. Oh, sorry. Yeah, you guys were talking. I'm short.
Okay.
I was a little early on my because I used the cross with the scalping line and the volatility line, but I went a
Ah,
little
okay.
early.
Even if it was still green, but you had
Now it's red.
bearish, you had now it's red, yes, but you had bearish on the direction and also all strength and
Yep. Yep.
directions.
Yep.
So
Then it turned purple and
that's another
surged
that's another
went
way to
down.
enter. Yeah.
Yep. Another couple of points and I'll get my TP1. Mm-hmm.
Hey Dad, on the note of like, well, with the morning stuff, could it be possible if you could message them and see if,
I don't.
if pausing it will impact my progress?
Just a moment.
Ooh, and 618 is here.
Mm-hmm.
Now keep in mind, middle of the boxes are a little bit lower, and also we have the bands too, so we might dip a little bit deeper into.
So the manufacturing data for Italy, yeah, for May, for the month of May, PMI falling to 45.9. So that's just slightly above the forecast, 45.9 versus the forecast of 45.8. But again, it's a reminder, it's in contraction territory.
Nie, nice reduction all of the market.
Main manufacturing data coming in below the estimates, 45.6. So again, it just underscores that there is this divergence between manufacturing and the services part of the European economy. Let's get
Yeah, only RTY
that we set up yesterday.
done the liquidity from Sydney Tokyo.
The US will eventually be hurt by its financial problems, and lifting the debt ceiling and the debt limit will not resolve underlying financial issues. Peter Orszag told us more about where he sees the headwinds.
Normally, when M&A falls as much as it has over the past 2 years, you see a boom in restructuring that hasn't yet happened. And the reason I think is twofold. One is we don't have a recession, which is what normally happens when M&A comes down this much. And secondly is the expansion of cov-like lending over the past 5 or 6 years. More than 80% of the lending over the past 6 years has been cov-like, which means you're not triggering the covenants as early in the process. Doesn't mean it won't happen. It just means that it's delayed. And then for Lazard, one of the things that's fantastic is we've historically been very focused on the debtor side. Our restructuring practice, which by the way is ranked #1 in the world right now, is expanding into the creditor side so that we can do both sides of the activity on both sides of that business.
Hey Peter, it's Alex. It's so good to see you. Congratulations on the gig.
Thank you.
I hear you on like this is how we're setting up. There's going to be a downturn, but the Cub Light kind of puts
Okay, so there's your reaction. If you want to enter long here, go with the trend.
Mm,
Tar-
but
target.
I looking to add to the short, your short.
Okay, target the Sydney high.
One of which is being taken off the table as we speak. So the key
I think POC is right here also.
life sciences revolution, and so on. Those are all very positive for M&A activity. On the downside or the headwind,
How many points I'm up?
No, PLC is at the bottom DC.
Really? Moved? No,
Yeah,
it's right. Ah,
no,
it's a little bit
PLC
lower.
is at 28 at the bottom where the open was.
And so I think if you look out over the medium
Oh, I don't know why my one is so different. Let me check this one, Ninja one.
activity over the long term are very, very positive.
So that's the long-term view. In terms of time frame, I do want to push you a little bit, Tom here in London, and thank you for joining us. In terms of by the end of this year, there's debate obviously in terms of when the deal making comes back, when that M&A comes back. Do you see that activity picking back up for you in the business by the end of this year?
Well, we'll have more to say about that when we report our second quarter earnings. So I'm going to just hold off on answering that question. What I would say is we are very well prepared and we are very well positioned for whatever market conditions come our way.
Speaking of market conditions, if you look at just the news yesterday, Goldman cutting a couple hundred more jobs. Morgan Stanley has been on its second round of job cuts. Really, Lazard made a decisive decision here to cut 10% of its workforce. How does this affect jobs across the financial industry? And honestly, Peter, you were the banker, frankly, at First Republic as it was figuring out its fate. Is there more pain to be had across the financial industry as we look through the year?
Well, look, I think there's a lot of stress on the regional banking system in particular, and then also, as we've discussed before, M&A volumes are down 60% over the past 2 years, especially because many firms, including Lazard, did less headcount adjustments throughout COVID for understandable reasons. That's exactly what one would hope companies would do, which would be a bit more protective in the middle of a pandemic. the combination of that and a substantial decline in M&A volume in the market as a whole is leading to the kinds of headlines that you were just referencing.
You see,
Yes.
going nicely. 29.
25 points up so far. We'll see. That's very good for London.
Slightly above the estimates of 42.9, but again, firmly in contractionary territory. It's a bit of a mixed picture in terms of its manufacturing PMI across Germany and France. But what it does show is that manufacturing remains clearly under pressure. Across the European equity markets, as we look at the euro dollar at 106, and it's a leg lower now, down 0.2% for the single currency. We're still seeing some optimism across these equity markets, gaining 0.7%.
That's it for the European market open. Surveillance early edition is up next, and this is Bloomberg.
We're going lower. I have to shut her up. Okay, so how many points should I secure?
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francie Lafferty in London, and here's what's coming up on today's program. The U.S. debt limit bill heads to the Senate after winning passage in the House amid a looming default deadline. Fed officials say the FOMC to keep the policy rate steady this month, but more hikes could follow. U.S. equity futures are little changed, even as Europe
opens higher. Plus, on the 25th anniversary of the ECB's founding, we get the Eurozone's latest CPI readings, and it signs that inflation is actually cooling. Now, first thing is first, let's check on the markets. We also have a bit of PMI figures overall for the euro area, so we have the individual countries. Just 10 minutes ago, euro area main manufacturing PMI coming in 44.8. Anything below 50, which this obviously is, means a contraction. It is a little bit better, really just a touch better than that preliminary figure of 44.6. Now, in the markets, let's check on euro dollar. I don't think it's having a huge amount of change, but 106.70 is what we're doing right now.
Do you see the volume profile which you want to see? It's like a 4 hour candle, or what do you want to see?
I want kind of like a fixed range volume profile. So in that case, I can modify the code to calculate it only on which bars between the bars that I have set.
Okay.
At the margins, the U.S. default now being taken off the table because we have a resolution certainly the passing of the House, and then of course the third encouraging news for the markets that the Fed could pause in June after we heard from two Fed governors. European stocks are gaining 7.8%. You can see it's not having the same effect in futures. The focus is also on AI and the fact that after the huge rally that we saw in the back of Nvidia, we're now seeing a little bit more pressure. The 2-year yield at 4.45, and then crude oil at 72.79. Now, I don't think there is much difference, but it's interesting to see there's not much difference in how some of these countries behave differently. But what was interesting is actually the DAX seems to be powering out.
This is my short happening. Okay, everybody, in a second, I'm gonna let the dog out.
Parties going to approve the bill, sending it to the Senate for consideration, waiting for President Biden and Speaker Kevin McCarthy.
Tonight, we all make history. This is the biggest cut and savings this Congress has ever voted for.
Well, the president called the agreement good news for the American people and says it protects key priorities and accomplishments for the past 2 years. Now let's bring in Bloomberg's Ross Magnuson with the very latest. So Ross, what's the timeline for a vote in the Senate, and could there be any last-minute hang-ups at this point?
Well, the good news for President Joe Biden is that Senate approval is virtually a given, which means this deal does get through, and that takes the debt ceiling off the table for the US election cycle, and it only caps spending for 2 years. The main question is simply when may a Senate vote happen? We had Republican leader in the Senate, Mitch McConnell, indicating that vote could come as soon as today. But beyond the passage, there are some other issues. Basically, some of the hard choices on spending have been left for after this deal gets through, and that means you're going to have some wrangling that goes on, particularly up until October, about some of the nuts and bolts about what gets cut and what doesn't. A lot to be ironed out. And of course, there are groups that are very unhappy with this deal. We've got progressive Democrats who say spending cuts are going to hurt a number of people in America, particularly the poor. We have ultra-conservative Republicans saying, hang on, spending is not going to be trimmed or cut enough or managed enough. So really, you've got quite fraught negotiations to come well after this deal gets through, possibly as soon as today. And that's really where we're going to see the fighting come out and the mess come out, which is exactly what gets trimmed and from where. And there's a lot still that's not clear on any of that.
So, Rob, how strong is Speaker McCarthy's position, given that he also needed considerable Democratic help to get this passed?
Well, his position has always been questioned, really, in some way. Of course, it took him about a dozen goes to become Speaker in the first place, and to do so, he had to make an agreement that a motion to vacate the chair, which is really an immediate vote to remove him, could come from one single person in the House bringing it. So that's putting him in a delicate position from the outset in a House with only a narrow majority for the Republicans. And now you do have one representative, Dan Bishop, saying he will call for a vote to remove the Speaker. And as I was saying, like ultra-conservatives say that McCarthy made a bad deal. It only got through Congress, really, with the support of the Democrats and less so the Republicans. And there is a precedent here, of course. His predecessor, John Boehner, he fell afoul of this in 2015 when Barack Obama was in power by doing deals then. But at the same time, McCarthy's been very visible through this process. He's not shied away from the media. He's remained front and centre. And he may get some points just for doing that. And also for the Republicans, it could be self-inflicted damage to have a speaker fight at this point in time. It might best for themselves they don't want. So perhaps that also might work in his favour.
Well, thanks so much, Ross Matheson here with the very latest, of course, on this US default. Now, we'll get Eurozone inflation data from May in the next hour. That's after some of Europe's major economies saw the pace of inflation cool for the former ECB president, Jean-Claude Trichet, told us ECB policy is heading in the right direction.
I was impressed by the fact that this target, this definition of price stability, has been reaffirmed very, very strongly by Jay Powell and by Christine Lagarde, so that the goal is clear, and there is a joint, I would say, definition of price stability.
Well, let's hear from our Euro correspondent, Maria today. Maria, run us through the data. So Euro area CPI in focus today.
Yes, Francine, very much in focus. We are waiting for that piece of data for May to hit in about an hour's time from that. We already had a number of national trends which would indicate a cool down for May. When you look at the details on the survey that we have on the Bloomberg, yes, another decline in headline inflation, a minor decline in core inflation expected, but not as fast. And that takes us to really what is the intellectual debate going on at the European Central Bank at this time. What is a persistent decline in inflation? When do you say, okay, the forces of monetary policy have really kicked in and inflation is on its way down sustainably? So you have to separate perhaps the energy to those forces that are more persistent in time. And Francine, just briefly, yesterday we spoke with the Vice President of the European Central Bank, Luis de Guindos. This morning he is on Spanish radio repeating this message that the ECB has probably entered the final stretch of the hiking cycle, and also says the 25 basis points, that is probably the new normal now. So that takes us to that decision in 2 weeks' time. Again, a clear indication it will be another hike, possibly around 25 basis points. The debate is now what happens next.
Maria, thanks so much, as ever, for that insight. You have a correspondent today joining us this morning. Coming up, we speak to renowned economist and author Denise Moyo about the global economic outlook. That's next on this review.
Yeah, that was a really nice shot.
Yes, I'm out of it.
Hit your areas.
Took 35 points, and now I'm in a long. TP1 is not hit yet. First one was a loss. I was too quick. However, the mistake that I did was that the strict candles were on.
Okay, why did you go long? I'm still in my short.
You just stay in your short.
Oh, I'm gonna.
Oh, I'm gonna. Oh, you watch me.
I'll do an Adam and give it all back. I double bottomed them and it turned around.
Yeah, we will see if this is just a reaction at that structure box and Sydney Frankfurt low, or we're gonna continue higher. But just give me my TP first and then turn around. Come on.
Well, DC, you can. I think so. You got the chance to see your TP. 99 to my 9.
My TP is 95. It just like kissed it and then it went away.
Ah, okay.
Okay, let's see if I entered too late or was spot on for TP1. I'm testing this TP1 winning rate.
Now, our next guest is a renowned economist and author, a Harvard and Oxford graduate. She sits on the
Do you have a hard set or in terms of number of points, or do you adjust it to the market?
I watched the ATR very carefully.
Yeah, yeah.
Okay, so TP1 is done, guys.
Very good. Now, please turn around.
Don't
Oh,
listen
thank
to
you.
Ian.
If only.
So how do you see it? Is it transformational technology that will leave many companies behind if they embrace it, or is it a job destroyer?
The scalping line's still red. So,
Well, I mean, if you think about it, Colton, these types of entries, you cannot count on the rubber band and stuff like that because everything will basically be against you. When we went short, higher time frame candles were green. Strength direction oscillator was green. Scalping line was green. Everything was saying, what are you crazy to go short here?
They're always late. They're always late.
Yeah.
So what do you think is some of the most interesting when you look at board levels? I mean, beautiful books that say how boards work. Like, what are
still,
they?
it's nice to see them change and go with the flow.
Yes, after that, it will be your confirmation.
Sitting right on the daily open at the moment.
I mean, how do you say? I mean, I have to say, productivity has been, big question marks for a lot of disappointments. Actually, during the day, like, is there anything in the medium term that we can do to get this up and to generate growth? And it's difficult because you keep on hearing from the AI experts that it's
DCI shorting it.
big piece of technology that doesn't really put the human, right,
You
to the
what?
center of it. It's
I
the
shorted.
technology that could
Ah, okay. Yeah, makes sense.
So what does it mean for, are we going to create quality jobs? I mean, if you're on the board, if you're, an economist, like, how do you find out what needs to happen so that we still have a labor force?
really break down to, as you know, 1900 we had like 60 to 70% of the workforce in agriculture. Now it's less than 2%. But in each of these changes, the workforce was absorbed into new skills, into new responsibilities. And now the question is, will that happen again? I'm not of the view that we'll have no new jobs, but I think the type of jobs that are going to be required
Come
are
on.
going to be highly technical, and this could be a problem for those who
Okay, so we're looking for. I will be looking firstly for 71.
So I'm going to be a good economist here and say on the one hand and on the other hand. On the one hand, I worry because I do think the precise
Okay,
skills that are necessary to
so
succeed
we'll
in
do
AI
this
skills
way.
are going to be skills that many emerging market countries just don't have.
I won't
Some
have
Oops,
the
of
sorry.
first TP. I will have the first TP at 71.
quantum computing, etc. But on the other hand,
No,
there's a
not
point that
71.
it's
So there is
actually
a lower
is
green.
becoming even more
At
fast.
74, I will have the
Some of
first TP.
this like open sourcing mean that anybody anywhere can tap into those productivity gains, and therefore there could be enhancement on a broad-based level. But I think these are questions that are still open out there. You and I haven't even talked about what are the risks and some of the headwinds that could come from AI that could undermine this whole productivity gain story, and also maybe we don't see as rapid a diminution in jobs as some
Could I
people.
ask you a question?
Yes.
What are the bands in the middle of the surge?
Ah, okay. This is the correlation tool, and one of the bands, a dollar. It's just color important for me because the bands they reading the move from NQ, but one of it's a dollar and second one of it's yen, I believe so. Uh, yeah,
The
dollar.
VIX? Yeah.
It's a dollar,
Yep.
but background is a VIX. So VIX is red, we should go higher, but I can see that the currency is going lower, and this what was proving me, yeah, it's a yen.
Yep.
The same, the band here, the color is from Nikkei.
Oh, the Nikkei. Okay.
Yeah. The other thing is when the background change black, it's a like a red one, but I didn't want to have a red. The background is
Yeah.
from the
That's
ES,
lovely. Yeah.
so it's mean we are in a sale. So actually, everything was hit quite nicely. I was looking
Okay.
for the good entry, so my stop loss. It should be a little bit higher. Now it's 10. We will do the 12 points. Yeah, above the storylines. But my first TP, I want to have 18 points from the first TP.
Oh, okay. So you don't go for the 100?
I don't know. It will be a much how much more it will be, but usually my first TP was 10 points. But because on previous trade I took only first TP, I didn't took a second one, and I lost 3 contracts. So I just want to get some money back.
Mm-hmm. Yeah, well, that's why I did the analysis of the sessions because I think 100 is too big for even
No,
London.
yeah. What I was looking for, 1 second. Yeah, if you go to the lower one, yeah, there is a bullish order block. So actually, this will make a sense. This will be, I'll take away 2 contracts here, and I will leave 2 contracts to run. If you'll hit this level, probably I will move one of the contract break even, and second one I will see what will be happening at that time. The
Yep.
100,
Yep.
it's no 47 will be quite nice. I will be happy with that.
Yeah.
Okay, now the stop loss moves to 10.
Ian, you making me regret I got out of the trade.
I was
Uh,
waiting on you. I was waiting for a nice entry DC and I got it.
oh, look at that guy. I'm just following my rules.
So 12
Okay,
points.
but that entry was pretty aggressive for you, Colton.
For me, aggressive? Come on. We touched the cloud. We couldn't do anything here. We make the new low.
Ah,
We
you
start
had a
to
cloud. Okay.
yeah, we start to
Hmm.
range here. The POC is just below us. So it was just telling me put the stop loss above the cloud.
Okay. I didn't have the cloud. There was no entry for me. We were at the. But yes, you are correct. We went contrarian into a support box, and everything started to go red. Volatility was below the moving average, so at least it gave me my TP1. But I should have left the trade running on the other account, not take it
Yeah.
on the same account. That was the mistake. Well, you got your 30, 40 points, guys, but there are there is the there is a POC and two very hungry bullish order blocks right below us. So have fun.
This is what I'm waiting for. I'm waiting. My TP is just above the order block, and I will take two contracts, which is like 36 points. 2 times 18, so that will be enough for me. And the other two can run. Don't like this divergent.
The candles are still red. So
Hmm. The nice thing is 1 minute WMA is below my stop, which is here.
yeah, I'm going to get out if this thing breaks structure.
Emirates, they are amongst those that have asked to be considered destroying what they, I assume, think they will be a political bloc in the coming years in terms of economic and military might as well. So those are some of the things that will be on the table over the next 2 days. Tomorrow, the things of this will be going on. Tomorrow, the things of this will be going on. Struggling to hear you.
Thank you so much. If you were having a little bit of interruption on our 1 o'clock, Cindy said that is a Cape Town. So plenty more up next, the UK show.
Oh, quick flicked off.
Bull trade stop. That's not good for my short.
Okay, so I maybe closed it too soon, but I took a scalp. I have a volume divergence on a Renko bar. It's very high win rate. This lady who long setup, short setup.
Yeah.
Yes, but you have to be very careful with that scalping because you aiming
That's it.
for
I'm out.
2-3 points and then you risk 10.
That
So
sounds crazy.
it's very inverse risk to reward. So unless you know what you're doing, you're gonna get killed.
Yeah.
Yeah, giving 10 points.
Yeah.
Trade stop.
But today I had 2 trades, both of them won.
Oh, okay.
Just take them when coming out of order blocks or previous levels that proved strong. Uh, Fib levels like we have now.
Okay, I'm out.
This is, I think they induced me. I think.
That's what it's designed to do, isn't it?
I'm out on 0, so that's good, but
Yeah, but
it was
I
plus
don't like
12
it.
points.
I don't like it when I fall for it.
13. Don't tell me they will do the same what they done to me 2 days ago on Monday.
Ah,
They weak me off, give me my TP and price reverse, so
that would suck.
Good morning, everyone, and welcome to Bloomberg UK. I'm Francine Ahmed here in London. Now, this morning, we're exploring the future of the UK auto industry under threat from trade rules, higher costs, and fierce international competition. As the sector switches to electric, Britain is far behind the race to build EVs. Now, one of the big stumbling blocks is a requirement under the Brexit deal, which could add tariffs at 10% on cars traded between the UK and the EU. And the British government has until the end of the year to negotiate a way around the commitment requiring 45% components in electric cars to be sourced in either the UK or the EU. That's for manufacturers to retain tariff-free access to the EU market. Now, car makers say the deal threatens the industry, with Stellantis warning that British car plants will close. This is what the Bentley chief executive told Bloomberg.
The good news is we've got a free trade agreement with Europe post-Brexit, which involved the automotive industry. So we get mostly the same ability to trade with Europe as we did before, but it's way more complicated and it does cost us more money. Millions per year, not tens of millions per year. But there's always devil in the detail, and one of the details is that starting from next year, and even worse in 2027, there is a rules of origin clause which says a certain percentage of components going into the vehicle has to be sourced in Europe to avoid future tariffs. And at the moment, the amount of supply base in the UK, particularly batteries, means it's unlikely to be able to hit that threshold. So
Good, I
buying
close
cars
it.
in Europe would have to pay the duty and the taxes, which makes them uncompetitive.
Well, the UK government has told Bloomberg it's working with the EU and car factory release sources. It was essentially, it's actually speaking to us at the Qatar time.
The EU is our largest trading partner. We have a free trade agreement with them. The terms in which
Okay,
the
guys. Cheers.
rules of origin
You gotta
Bye.
go? Okay. I hope you took some profits.
Yeah, I'm up.
Okay.
Bye.
Talk soon.
Yeah, background changing green now.
continuity agreement is up for review in 2025. We're looking to see what we can do in advance of that because, as you know, there are lots of global headwinds that are affecting our industry.
So that was just over a week ago, but there have been
Are
no
you talking
breakthroughs,
to?
and it's potentially
Oh,
going to
guys in
affect
Europe.
the UK. Some 780,000 people are employed in the automotive industry. They produce almost a million vehicles a year, and 8 out of 10 cars are made here as an exporter. There, let's discuss all of this with Bloomberg's global car czar. He's Craig Fidel, as well as Michael Dean, a senior European automotive
Yeah,
analyst at
Colton
Bloomberg
and
Intelligence. So thank
somebody
you
else.
both
I don't know
for
why.
joining us. I mean, this seems like a little bit of a nightmare, right? To deal with and try and puzzle everything together. How serious are these post-Brexit?
Yeah, I think this is a classic sort of tragic irony of this desire to get out of the EU led to some of the same complications and bureaucracy that was sort of what precipitated a desire to leave the EU, right? So this was a matter of leaving a customs union that made trade simpler and uncomplicated. As we heard from Adrian Hallmark, the CEO of Bentley, they became much more complicated and it's going to be costly. And there is a sort of question of where do you want to direct your investment? A place that's low cost, less complicated, or higher cost and more complicated? It's a pretty simple question.
Yeah, so how can they change? I mean, I know that, we can spend 2 hours saying why would they agree in the first place, but if they were agreed, pre-Brexit, is there anything that Google did on how to change things?
I think so. You've also got to remember that although we export 50% of UK production to the EU, 65% of UK sales come from the EU. So it's issues for both sides. So that means there should be a willingness for both sides to come to an agreement.
I mean, how much does this have to do with also cost coming out? But it's almost a perfect storm for everything.
Yeah, that's true. So 40% of a battery electric vehicle is the
Hey
base
Colton,
cost.
have a look at my
So given the
beautiful
metal types
simple
that
chart.
go into a battery, it's quite beneficial
The
to
volume
be able
profile
to
just moved
transition
up.
to battery electric vehicles over the next few years.
And costs are not going to go up. Can I just spend a moment and say the sartorial elegance of
Ręką.
experts is it's a white shirt,
Ah, yes, yes, yes. It's very
it's
clear to see
very classy, but
the
the
swings,
both of our experts, but you
but
look at
that's not
cost at
the
any point
important
in time,
part. It's
it's not
just
anytime soon.
based. Everything is based on fibs, and then did you see those two order blocks over there?
The
Uh,
bullish one was really huge, like double one.
yeah.
Okay, so you close your long too early.
Too early, yes, I let it scare me off. But let me see if where did I close? No, stop would have not protected me. 81. The low was 81, so my stop was 79 something, right? And it went 78. So that would have been a loss. So I just closed it at break even on the second contract.
That makes sense. But actually, for me, it makes sense to short now here.
And it's a question of whether or not the sort of retained
Not,
expertise
not
and
touching it
experience
now.
is enough to make up
Happy
for some
with
of these
it.
other aspects of the industry that have been the sort of reasons why so many manufacturers have been moving elsewhere.
So how do you revive this, right? I mean, and this is, I guess, what we're trying to figure out. You write about this every day, and do you, when we look at the blueprint,
Well, for me, it's like in this we are in the middle, right? Do you see my zones?
Mm-hmm.
So I wouldn't do anything now. The upper 78.6 didn't get touched, so that is also in play, and the lower 76 also. So we're just in the middle. From now, probably we will start ranging.
for JLR will come to the UK. So that would be a massive positive for the UK. It would come at so 6% of their battery needs in the future.
yeah, Michael, so
Actually, yeah. I will
we're looking at doing an agreement with the UK.
try on micros.
Yes, that's Australia, if it doesn't come through.
Three.
Because, they do these
12
batteries.
micros, 3 TPs.
It's going to be an issue that they will become uncompetitive. They're going to sell to
And what we got here is Ethiopia.
But to both, do they need the steel, for batteries and automotive, or do they just need it so that it says Britain's open for business?
A bit of both. So, subsidies are key. So there's been huge headlines about the Inflation Reduction Act in the US
That's
attracting
okay.
battery
Even lower.
from EU companies. So
Only 7
the UK
points.
government has to back.
First TP will be,
And that should be the case with
but it's completely going against what I was doing earlier, but we're ranging today. Okay.
You're not sure you're in charge for it.
I think what we absolutely need, just to follow up on what Mike was talking about, is an industrial policy, and that's something that we consistently.
I really want them to go to do this order block.
The UK lacks an industrial policy to justify keeping production.
The selling one.
Yeah.
The Inflation Reduction Act that really sort of raised the stakes and is going to force the hand of the government to really step up and support and save this industry.
At the same time, I guess, the industry that was really doldrums during COVID has not only recovered, but luxury sales cars are doing really well.
Yeah, and I do think that there is absolutely a place for companies like Aston Martin and Bentley to maintain production in the UK, even if it means, even if we are unable to attract.
We got quite a lot of the bearish volume in these candles now.
Volkswagen's supply chain, using batteries.
On the print profile.
Yeah.
And help get that threshold, and not necessarily need to localize battery production.
Top of the golden zone.
Their presence in Peru as well.
I mean, it's amazing. It does employ 780,000 people in the UK. This industry, it's a lot of people. And if you look at versus targets that the UK has set, Michael, the UK wants basically hybrid by 2030 and completely electric by 2035. And that's a huge amount of cars that need to be made and then driven.
Yeah, it's going to be very difficult. You've already seen the EU dying back, or some EU countries dying back, on when they're going to ban the combustion engine. In terms of market share, it's about 15% in the UK. That compares to 13% in Europe. So we're still a long way away from this being an issue, certainly not in the next few years. And certainly in the second part of this decade, we need better battery supply, but we also need better charging infrastructure. So that could be another part of the puzzle that's holding the transition back.
I mean, that seems hard, right? Because I don't know how long it takes. First of all, you need the copper and the things to make it. And again, we don't have an industrial policy, and the Chinese have really thought about this, maybe more than G7 countries. But how long does it also take to put these charging stations in place?
Yeah, it takes a long time because you need the people in place, you need the finance in place, you need planning permission, they're very expensive. So globally, there's 2.7 million public chargers in place, only 600,000 in Europe. We think you need 2.5 million by the end of the decade to meet government targets. So they've got a long way to go. We're probably putting in about 150,000 chargers at the moment. So that needs to double if we're going to meet these targets by the end of the decade.
So industrial plan now is basically the call for action for the government, right?
Yes.
It's just need an industrial plan.
Yes, and it's long overdue. I do think that some of the warnings that we've heard
Would have stayed in, but it wouldn't have run a lot. The ATR is dropping, right?
Mm-hmm.
Mm.
this industry to languish, and do need to come up with an answer to what the IRA, what's happening with the IRA, and in the EU to answer the IRA, places like France and the rest of Europe.
Such an important conversation. Thank you both for joining us. Bloomberg's global czar. I love saying that. Craig Gallagher from Bloomberg Intelligence.
I think I'm up already more than 100 points for today. That's a good start of the month.
The really good one.
Anything below 50 is still in contraction territory. UK firms are expected to raise prices some 5% in coming year. That's the very latest forecast from the Bank of England. Coming up, batteries and Brexit. We'll talk more about the state of Britain's electric vehicle industry and why the UK is being overtaken by others. This is Bloomberg.
And you can see the volatility dropped because my Renko bars now take ages to complete.
Okay.
They're like, sheesh. So I might just drop off, prepare for some dinner, and then
I thought it turned
until
you off.
until New York, just try to read some of that ninja trading coding. See if I can understand something.
What they talking to you?
Yeah.
Something's there.
That's what I'm waiting for.
You wanna go short again?
I am. I told you
Oh, okay.
I got 12 micros.
Ooh, good level too. Session view up, but the session is still bullish.
What the hell is going on?
However, this is what? This is this is bullish one, yeah. So you did good. You shorted in the discount area, so that's good.
Bloomberg, so you track and measure and actually see where the soft spots or the blind spots of the UK government are. How are we doing on electrifying?
Yeah, definitely they manipulated this one. It just went one candle below the 786 and then back up again. Bastards. So even if you had your stop below the 786, it's still, like I did, it still wouldn't have been enough. But something tells me they're gonna take Sydney high. And I'm not in it. I can try to find a reason to get into with the micros. Where's your bike? In the park? Hmm? You went by bike, right? What? Oh, okay. Come here, come here. Wipe the sweat again, or just change the pajamas. Shower through.
It's a mixture of both. You definitely want to attract what we would term
Okay, so what do we have?
generally kind of nine companies
Bears
globally
are tired. Okay.
electric batteries, etc.
Candles are green. Okay.
I'm out.
So you need to kind of
Hmm.
companies, the ones with the experience and the technology.
Dividers. They're both green, red, not okay. Session control bullish. Okay. We are above middle of the session.
Why I
We
told
might
you
get
8 points, not 10.
we might get stopped here at the Frankfurt high.
Upper green as well.
Upper green at 09. Yes, but why in this case? Why you did all this? If you're not
Be-
going to take on
because
Sydney high.
today they can.
Every day they can.
1 second, what news we had and what we waiting for?
Surge
Oh,
started.
there
Okay.
was few 9:30. So there was a few things which was making this move. There was a French, Italian
PMI.
PMI, unemployment rates, UK PMI, mortgage supply, and other bullshit. And now will be Europe in 12
Hmm.
minutes. And after that, probably I will be having
Leaving it
my
alone.
yes.
Yeah, you need to compete at that level. The amount of money that's been put on the table for the Inflation Reduction Act, in particular by the US government, is a scale that we've never seen before. It's many hundreds of billions, potentially trillions of dollars that will be in terms of support for a full lithium-ion battery supply chain from the mining, the critical minerals through to recycling. So it does up the ante as the UK government looks at this. But as I say, it's probably not too late, but something needs to happen, in the very near future.
So this, if you want me to give you a help testing your new amazing tool, I am more than welcome. If you can share it.
Yeah, more than happy. Okay.
Uh,
But no. This one cannot create text tool. I wanted to put like a transparent discount premium on top, but I don't see the point. I will also try to put the code for alerts also
that would be
first.
nice. Yeah, when you do the swing.
So you can put uh, 50. I don't know if it's well 50 also. Why not?
Pretty much need to be tested all the time. Okay, we are in a bearish order block, a small one.
Yeah, we are, but we're gonna eat through it. Gonna take a little bit of time, but we're gonna eat through it.
The infrastructure is important. Obviously, there's range anxiety, so having access to charging, but also, what's challenging is we've seen prices for critical minerals. At the peak last year, lithium prices were 10x where they were just before the pandemic. So it's also managing costs. So being able to build out that scale to keep costs low, to enable more consumers to be able to afford electricity.
That's a beautiful move, and I should have trusted it.
Mm.
I should have trusted it. Do you think I should have re-entered? Yeah, probably, yeah. After re-entry, my drawdown would have been 0. Entry was around
Candle change to white.
83. Between 83 and 83.50. And now we are at 12.50. That is 40? No, 30 points. Ah, you suck. Outside of the cloud, we're gonna go back inside the cloud.
Economics, finance, politics. This is Bloomberg UK. I'm Chelsea Macbecker in London. Now, this morning we've been exploring the state of the UK car industry, threatened by Brexit, trade wars, and at risk of falling behind in the switch to electric. Now, while the UK has only a handful of battery plants, Europe has at least 35 up and running or under construction. Well, it's been Bloomberg's Elizabeth Byrne from Munich. Elizabeth, good morning. Why does Europe seem to be so ahead of the UK when it comes to batteries?
Yeah, it's a bit of a relative question. If you look at the UK, they've been distracted since 2016 with Brexit. There's been high octane political drama, successive business secretaries, successive transport ministers. So there's not really been much of a line on developing an industrial policy. And when you compare that to Europe, you have to look back to around 2018 when the race and this realization to try and close this huge gap in the value chain in EVs. That really started to take shape then when France and Germany formed an alliance. And the whole thing became an election issue even in Germany, like this push to build lots of battery plants. And then it reached the EU level and things started to take shape. And today we're really seeing the first fruits of these in the shape of actual plants that are producing and up and running. And just this week in northern France, Stellantis, Mercedes, and Total inaugurated the first stage of their plant there. And then we also have in Sweden Northvolt, which is up and running. But this makes it look good versus the UK, versus elsewhere, Asia, there's still a lot of catch-up to be done.
Great. A final thought then, Elizabeth, maybe on the post-Brexit trade wars. The Stellantis chief executive has called them a lose-lose situation with both the UK and the EU. Why can't the two sides work out a solution?
Well, first of all, Stellantis is right. The European supply chain is not ready to meet these rules of origin. It's also to do with rising raw materials prices that are making batteries more expensive. In terms of
And along, my 20 points will be done now. If I will open as everything was showing to open
from the UK. We've heard
At 94.
where we've had notable silence so far is from the EU
Yeah.
Commission. I can't speculate on their readiness to reopen the deal
Ah,
on this.
top of the box. That's why we
Of course, also a lot of smaller states in the EU that
flip a little bit here.
multi-billion investments, notably
And upper fib. But if we can stay above the upper fib, definitely next target is Sydney High.
Subscribe to Bloomberg's Insane podcast, also that I host alongside Dave Merritt on Apple Podcasts, Spotify, or wherever you
Question
get
is,
podcasts.
will it give us an entry? Ah, Koltun alerts are not that easy.
No.
Mm-mm.
Yeah. So I set up nice finger yesterday on my correlation, and it looks like that's working well.
Oh man, you don't want to see the sandwich or structure levels on the 5 minute.
Okay.
It's so
Busy.
ugly. It's so ugly.
Why my oil don't wanna go up? There is a nice heat level on daily. I'm just going it down.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. New inflation data this hour may determine whether the ECB keeps hiking interest rates. Meanwhile, Fed officials say they're in favour of a June pause, but more hikes could follow. The US debt deal moves to its next phase. The deal now heads to the Senate after winning House passage with their vote a bipartisan accord.
Bear, hidden bear. too late. I want to short it, but I am too late.
What? You wanna short it?
Not here. Few points earlier. I just.
Ah, you
I,
already lost it.
I was
Yes.
playing with something.
And
5 points. 5 points. So it's too late for me.
yeah, but I don't know how much it will.
Yeah, here. Beautiful. Done my TP from the order block and now short started. Okay, I will do it.
Go short now?
Yeah, I'm going short now.
Okay.
It's too late because I should be on the top of the cloud. Okay, full 10. No, I don't like it. And really, I want to see this bottom order block tested.
Well, on those inflation concerns, the
Okay.
Fed's costing right now
Working.
4% of Eurozone inflation, and the headline number coming in slightly below the estimates for the importance around core inflation.
That's nice. Better trade stop formed.
So this is good news, at least on the level, at least on the service level for the ECB. We'll have to have a look to see if there's a change in terms of market pricing around the next steps. June still seems pretty certain in terms of another hike from the ECB, but really there is a question mark over July. So
Where are you if I cannot see you?
in at 6.1% year on year. The estimates were for 6.3%.
Oh, I can see.
5.3% year on year.
That's nice.
5.5%. So 5.3% year on year below the estimates of 5.5%.
Scouting line. You are there on this chart. I cannot see you. I don't know why.
There is more work to be done. We will check in on the market moves then, with a particular focus on the euro dollar and also those sovereign bonds across the equity space. We have seen an uplift.
First TP, will be having 12 points this year.
Top is 12 points, right?
Excuse me?
Top is 12 points also, right?
10.75.
Okay.
European stocks. Euro dollar 106. It's flat, but the levels last seen since March for the single currency. And on we put this out because of a
And TP I've got at 92.25.
the China data again, 1.7% on the back of that. And Doc Martens is an idiosyncratic story, really. But this is the famous shoemaker here in the UK, bootmaker.
Yeah, I'm just above the VWAP.
Estimates coming in, full year earnings coming in below the estimates, and a cautionary note from the analysts that maybe the peak.
I'll be back in a sec.
Now, for more of the inflation data, let's get out to Bloomberg's grid today from Brussels and break the data down for us. And Ria talks about the importance of core because you flagged that to us earlier in the morning. Give us a take.
Yes, Tony, you look at core inflation, it's out at 2% in May for the euro area. You look at headline inflation at 6.1%. The trend here is obviously a big cool down, which again is not that surprising on the euro, but we have from a number of national prints yesterday. Obviously, yes, both numbers are still above the European Central Bank, but what really matters is the trend here, and it points to a cool down, actually better than expected when it comes to those cooling down in numbers. Now, the other issue here, especially when you look at headline inflation, what the European Central Bank really wants to see is this determination. The monetary policy, this hiking cycle, the most aggressive since the creation of the euro, is now really feeding through on a persistent medium-term basis. And this is not just connected to energy. What we've seen, and we've seen this repeatedly over the past few months, is that as soon as energy prices go down, headline inflation follows. But what they want to see is almost this intrinsic proof that this is sustainable and will put inflation now on a more medium-term direction to hitting that 2% goal. Overall, of course, the numbers you could
argue it is welcome news. It would point to this cool down. We know there is a meeting in 2 weeks' time, and the data will be key. The European Central Bank repeated now many times it is mega data focus and focus on the past year monetary policy too, and they really monitor that core print coming in at 5.3% per week.
And of course, that data key focus for the ECB's next meeting coming up on June 15th. Welcome for TV had a very special guest earlier on air. We spoke exclusively with former ECB President Jean-Claude Trichet earlier to mark the central bank's 25th anniversary.
25 years is a quarter of a century, and we started the ECB and the euro in an environment of great pessimism. As was said a moment ago, it was the, I would say, coldest endeavor. I don't think because
Such a rainy day, but I like it actually.
Well, the boldest endeavor, Maria, working out, wouldn't you say? Talk to us about what the ECB is going to do with all the data this morning.
Look, and on top of the data, by the way, that we got today, the ECB is expected to put out new projections in June, so that will also be important in terms of the narrative here for inflation. And look, today we heard again from the Vice President of the European Central Bank, Luis de Guindos, who was also on Bloomberg TV yesterday and repeated at this point, the ECB has probably entered what is the final stretch of this hiking cycle. It's also notable that he did say it does seem that at this point, and this is opinion, obviously we know the Governing Council entails a number of views, but he says in this view, in his opinion, 25 basis points will be the new norm going forward. Again, this downshift has already happened. There was a question as to whether it would be sustained in time. The words from the VP of the European Central Bank would signal that, in his opinion, yes, from now on, it is 25 basis points. Now, when it comes to the meeting in June, the market is very well calibrated that there will be another hike, but the serious question is what happens next? How many more hikes could be to come if the ECB decides that should be the way we're actually, if you look at the market, some of the cumulative basis points hikes that were priced in, the 50 basis points, that reverse in touch yesterday, signaling there is now an open debate as to what happens after June.
Yeah, a question that we are starting to explore stateside as well. Maria Tadeo over in Brussels, we thank you as always for walking us through that crucial data. And from Brussels, we come right back to Washington. The House has passed the debt limit deal created by President Biden and Speaker Kevin McCarthy that would impose restraints on government spending through the 2024 election and avert a destabilizing U.S. default. McCarthy spoke after the vote last night.
Alerts should be on the golden zone, right?
Yeah.
Mainly.
Mhm.
Do we need anything else?
Mm,
Target doesn't matter, right? I mean, we don't care so much.
Target doesn't matter, but oh, my short will be amazing. Actually, the worst case scenario, I will re-enter if this will take me, or if it will go higher, I will add more contracts as well. Because I got trailing stop printed for on a 3-minute chart. Target doesn't matter too much, but what will be nice, 50% it will be nice to know. Because when we'll put it on a higher time frame, like on 15 minutes, on bigger swings, you would like to know did we reach there or not.
Yes. Okay.
In terms of amendment votes or something else, in order to agree to a speedy vote. We haven't heard from anybody who seems like they're going to try to burn the place down, but there are probably going to be some amendment votes that are destined to fail, and even some, for example, in order to give permission for a quick vote, he wants to answers about the possibility of further defense spending that goes over caps set in this bill. So Congress is already trying to find ways around the spending constraints. But long story short, it does not seem that anybody's going to try to delay a vote, and it does seem to be in pretty good shape heading for a Senate vote.
So, Jack, as the dust appears to settle on this deal, who comes out best? Who is best furnished or indeed wounded by this deal?
Nobody was terribly happy, which is probably a good sign that it is a true compromise. The Republicans got more out of this than Democrats, certainly. This is a list of things that conservatives wanted. It's not as conservative as they wanted, but they managed to get some spending constraints in a Democratic administration. administration. They managed to tighten some work requirements for SNAP nutrition aid eligibility. There's really nothing particular in here that Democrats proactively wanted that they got. Although if you compare it to the original Republican bill, there were a lot of concessions made from Republicans just in terms of fewer spending caps, fewer spending cuts. So it's certainly a compromise, but it's one based off of Republican principles.
Well, Jack, we know that in the short term, things look like they are just fine. But of course, this is going to then push ahead to the 2024 presidential election and what comes right after. Talk to us about in about a year and a half's time, January 1st, 2025. This feels like yet another big issue for whoever decides to, or whoever is elected to office. Jack, talk about the long-term debate on the debt ceiling as just kind of a function of this saga that we go through every couple of years. What is the feeling in Washington about whether it's even useful?
A lot of Democrats would like to get rid of it. That's probably the mainstream position among Democrats. They have not had enough support to get rid of it, or they didn't have enough support to get rid of it when they control both chambers. I think people like Senator Joe Manchin generally seem to think that a spending cap deal like this through the debt limit is a good thing. But many Democrats would like to get rid of it. Some Republicans are interested in maybe tweaking the process so it's a little bit less focused on brinkmanship and getting us close to a deadline. So there are some big questions being asked. But really, it's been a number of years that Congress has questioned itself about its budgeting process, about the debt limit, and they have not made major changes. So that's something that's simmering. I don't know if this fight brings it to a full boil, but there are questions being asked about whether lawmakers really want to go through this again.
Okay, Jack Fitzpatrick on this bipartisan deal. I'm looking ahead to some potential challenges that may rear their heads once again when it comes to US politics. Oh, Bloomberg government, thank you. Now to the tech space, and NVIDIA losing some ground in the pre-markets after a record, of course, AI rally. Some investors have expressed concern over high valuations. Joining us now to discuss is Bloomberg's Alex Webb. Alex, do we see, to get the sense of a wry smile forming on the lips of Cathy Woods? What do you make of this?
It is interesting because actually this $1 trillion market cap number, which is kind of, an invisible hurdle, doesn't necessarily mean all that much. We've seen something similar when other companies have tipped in. When we've seen Amazon get to $1 trillion for the first time, Apple did for the first time, we saw a bit of a sell-off in the day or two. So following that, it seems to me you have done that positive. Even though we've already known AI, people aren't quite sure how to root it. Is NVIDIA the best player? It's still got lots of legs in it. It's quite hard for anyone to tell because we don't quite know how the market will go next year or after. But also, maybe better before when it comes to things like crypto and Web3, this feels like a different set of technology where it has immediate applications that lots of people can see, but there's a bit of hesitation.
We should talk about another major tech name, and for those of you who kind of watch the Dow specifically, major Dow component, Salesforce, Alex, also edging lower in the pre-market. Their results we didn't get that traditional artificial intelligence phrase dropped in anywhere that we did for some of these other tech companies. What's the story with Salesforce?
This is a fascinating equity story at Salesforce because we've really seen them pivot away from being a growth stock and focusing on profit. And a number that seemed to have disappointed investors, particularly yesterday, was what the company calls current remaining performance obligations. Essentially, this is order book in the broadest sense. And that was a little bit low what the market was expecting. We've seen the valuation as a multiple of its blended forward earnings for Salesforce come down, even as the stock was remaining relatively robust. In sort of 2019, 2020, it got to 70 times its forward earnings. It's come right the way down to 29 times its forward earnings. And that's partly because the earnings themselves have come up massively. There's a real focus now on profitability. They're not investing profits as readily in gaining market share. And perhaps there's a little bit of hesitation from some investors who were still in the growth stock and not necessarily in what this stock is now becoming.
Okay, Alex Webb on Salesforce and NVIDIA, of course. Thank you. Now, coming up, we're going to speak to Rebecca Ibrahim of DCA Research and why she sees a potential monetary policy mistake looming in Europe. And indeed, the matter, it also says...
Okay, DC, if you